Morning, friends. Markets are teetering on edge. Low liquidity is keeping the S&P 500 in a tight range after a 10% correction. But is it the only thing stopping the market from a total free fall? Well, let's dive right into the volume profile and the VIX and find out what's really driving this action. And that means we're off to the charts, and then we'll look at this market situation in more detail. All right, thank you, and let's go. I lost where the button is. That's not what I want. That's the thumbnail I drew this morning. This is what I wanted. All right, we're going to start off with our standard market analysis. I always try to flare it up in the beginning. It's a struggle coming up with a new topic every day. Well, no, not really, because the market is an endless source of material. But anyways, as you know, the past 10, 12 days have been a roller coaster ride. Seems like we went through, 10 out of 13 days that we moved down, and then finally we hit bottom, and the market seemed to prop up in a sustained rally. Was it a dead cat bounce, or was it the pending doom that lay below in the structure of the market? And that's what I want to look at in more detail today, and particularly what happened yesterday. We had a 3-day rally, total turnaround. Of course, some people will speculate on exactly why that happened. I don't know. But in any event, we dipped our toe again in that low liquidity, and the market didn't like it. I'm getting a little bit ahead of myself, so we'll do our normal Zero DTE butterfly analysis, where we look at the VIX for our exposure to that overall risk and premium that's available to us. We'll look at the market direction and also at the market structure. And then we'll talk a little bit more about the current economic situation and what might be keeping us in a range for a little bit. And as long as we stay above that VIX of 17, I don't care. So let's get to it. So right now, as you can see, the VIX did get down, just hitting the edge of that Zombieland, which is 17 or below. That really causes us to go into this kind of freeze mode, Zombieland, like you're being chased by brain eaters and you're running through mud. That's what it feels like when you're in Zombieland. But as long as we're in Goldilocks zone, we feel much better, much more free and open. And we're still in Goldilocks. We bounced up a low of 17, and then yesterday a high as 19. So that's a significant rebound after this mammoth fall from 29 to 17. But that means that we're going a little wider today, 25 to 35 wide. Let's take a look at the big ass fly. I haven't set that up yet, so we'll have to do that. And all right, so we'll just put on the ES. I do this every morning, usually before I get on to talk to you guys. But let's put on an at the money butterfly. We'll start with a deep and wide. We'll then pump it up. What's going on here? We'll pump it up to, let's see, 57.10. I should have done all this pre the show, but hey. All right, so yesterday we were at 24. Today we're at 18. All right, so that's pretty significant change in the debit on that fly. That means that the market is really experiencing and taking in this move down and injecting a lot of volatility in there, which is delaying premium decay and inflating the value of options and giving us much more potential in our butterflies. And so that's why we can trade wider, because there's less risk, more potential profit to collect from those flies, and lower gamma risk. So all of those things are in our favor. I like moving the butterfly over like this and making it nice and wide so you can see that. So this morning we do definitely have a big ass fly. Well, geez, it just jumped up to about 19.5. Wasn't it just at 18? I thought it was at 18. Anyways, market must be moving. Let's go back to, I am not even showing you this, am I? There you go. Well, you didn't have to see the the sausage being made there. So here's our big ass fly. You can see we're right at 19. Yesterday we were at 24 and change. So yesterday was reflecting the dropping volatility. Today is kind of a reprieve where we've got a new injection of volatility, and then that causes the whole butterfly to kind of rise up like ships rise up in high tide relative to the dock. All right. So let's go back to our VIX. And we can see here that on our big ass fly butterfly width gauge that we're now down below 20 again. So we're looking at 30 wide, maybe on the edge of 35 wide butterflies today. All right. And next is to look at the market direction. We are still with a directional bias that is bullish. That's because we're sitting above the moving average. The trend does look like it's taking hold now. Sure, you have to have some down days every once in a while, and yesterday was kind of a surprise, but it happens, right? And let's take a look at the market structure. We can see here we came down to the bottom. We've come overnight. We've come off that bottom, and looks like right around the open of the European markets, we had a little bit of a dip and come back. And man, see, we're trying to get back or escape from this volume node. That's what this green line is, the bottom of this volume node, and here's the top. And that was part of the discussion I wanted to have, so we might as well lean right into that right now. So just to recap, we're going 30, 35 wide, call flies, and now we'll look at our market structure. We're potentially looking at a trade off the bottom of this volume node. So let's take a look at a big picture of this node, and you can see this big dark area here, right underneath this big node that we're currently in, represents a lack of liquidity. There, obviously in the node, more trading is happening there, more liquidity. Market drops down into this thing again and says, we don't want to go there because a drop there could potentially mean a quick move down to, at least 100 points below. And so it said, nope, no thank you, and is now staying up here in this, I guess you could call it relative value or relative comfort for most of the market. And so I see right now that there's a potential that we could be range bound for a few days up in this area until we get going, and then can move beyond this other critical area, which is breaking out of this node here, beyond this huge volume well, or this crevice here, which represent tremendous resistance. And as you can see, that's what happened exactly yesterday morning. Just hit right there, right at that crack. And then if we can drive our way through up here, we can see another pretty good move. I mean, there's a potential that we could move up another 200 points in relatively quick order if we can just get beyond yesterday's high, or I should say yesterday morning's high. And so that's where we stand right now. Not much else to say about that. I mean, we do have economic reports on board. Let's see if I can get to those. And Safari. That's not what I want to show. That's Grok. We want finance. Oh, well, here's something I'd like to show you. So every morning we're taking the temperature of where the Fed is, and the best way to do that, now this is kind of an advertisement, but not really, because I don't really have, this is not monetized or anything like that, but this is an X account that I have called FOMC Alerts. And it's followed by quite a number of people, 32,000, almost 33,000 people. And it is constantly monitoring anything the Fed has to say out there. It is looking at all of the Fed governors, the voting members, and many other economic indicators. And anytime there's anything that appears on the internet, it immediately grabs it and puts it here as a tweet. And then you can go to the source story just by clicking on the link. And you can see it's pretty popular. And it's been growing like a weed. So that's FOMC Alerts on X. All right, so what I really wanted to do is show you the market report or economic report situation. We have coming up in a little over a half an hour, the final GDP quarter over quarter. That's going to be a very impactful number. And of course, our weekly unemployment claims. That is also going to, I expect volatility will rise into that. So then when we're talking about the big ass fly, right now it's at 19. You might even see that, that price drop a little bit, maybe to 18 and a half. And that's because volatility will rise into the release of these reports. And that's the reason why we put on the big ass fly in the first moment. We're looking for the release of those reports. Yes, it may cause some market movement, but what's going to be impactful for us is the volatility crush event that will happen after those reports are released. And that will almost immediately give us $1 or $2, maybe even $3 of value in that big ass fly. And so that's the reason for the big ass fly. It's a wonderful trade. All right. So I think that's about all I wanted to talk about. We'll go back to the big head. There we go. Ready for another great Zero DTE trading day. Volatility is back, at least for the time being. And we'll see what happens going forward. It looks like the market doesn't want to go and dip its toe into that low liquidity and wants to continue this rebound from that 10% correction that we experienced. That's what I expect. Of course, you know, with tariffs still being bandied about, I would think that there's still going to be plenty of excitement in this market, and that's what we like. That volatility is what we thrive on. All right, so that's about all I have to say. Thank you, everybody. Good trading to you. Coach Ernie, out.